800-951-0592, still not working, but they're close. The 800 specialist is on the phone with us as we speak. 623-780-3117, or go to allamericangold.com. Gold is flat now, 1943. Silver's up 38 cents. We'll just call it 40. 40 makes it sound better, right? 23, almost 23.20 on silver. All the specials from yesterday, I'm honoring those again today because a lot of people were trying to get through, and obviously with the 800 number problem, $10 Liberties. Still the buy right now. 1 through 19 at 11.25, 20 or more at 11.20. $20 Liberties, $2,300. Silver Eagles. We were already, the cheapest around, and today silver's up 40 cents, and I'm going to keep the price. $790 a roll. Everybody else is, they're way out there. They're 820, 830, 850. It's like 900. Yeah, they're out there. $790 a roll there. By the way, utility silver, junk silver, dimes. Rolls of silver dimes, $120. Rolls of silver quarters, $240. Rolls of silver half dollars, $255. And again, remember, it was Citigroup yesterday. Yeah. Silver's going to start with a 3 sooner or later. And of course, I think it's going to be sooner. I think it's going to happen this year. But Citi says, hey, the next 6 to 12 months, expect silver to be in the $30 plus range. And of course, we've got the debt ceiling. I got to update you on this. So Janet Yellen says, hey, June 1st, we're out of money. Right, so that puts us right next week. We're going to be out of money. Well, here's what I think I know. Okay, is right now I think the Treasury has about $140 billion in its checking account. I also know on Monday, and of course Monday's the holiday, so let's call it Tuesday. They need to send out $120 billion. So, yeah, that's cutting it real close, Jason. There's not a lot of extra money in there, but that January 1 date, that's when the Social Security money starts going out. And so they may be able to get those checks out and run out of money. Maybe they don't run out of money to June 4th or June 5th. But that's way too close. And that's if I'm right. And I don't know that I am, but that's what I think is the situation is the Social Security checks. And again, I run that commercial. I tell you all the time. In the courts, in the eyes of the law, Social Security is a tax, period, which means the government doesn't have to pay you anything because it's a tax. Having said that, I don't know if you caught this, but some of the Democrats were hoping that June 1st was the date because then they could blame the Republicans because they had already agreed, well, yeah, logically, well, what don't we pay? Well, the logical answer is, we just don't send everybody their Social Security money because that technically we don't have to pay anybody, right? We're not in default that way. We can pay the interest, we can pay the creditors, right? The one thing that we don't have to pay is Social Security. It's simple. Now, I don't think that's going to happen, but something new has emerged. The Republicans, ready? This is going to be the big ask. I think they're going to ask that the IRS funding, the $80 billion, right? They're hiring 87,000 IRS agents. Ready for this? They're going to ask for a $10 billion reduction, Jason, we're only going to give you $70 billion, and that'll get her done.
And correct me if I'm wrong, but the money doesn't technically completely run out. It's just the ability to pay their bills on time smoothly runs out. They're still getting revenue. They just won't be able to pay everything because they don't have enough coming in to pay the bills that day or that week or whatever. So there's still going to be money coming in, and then they'll have the ability to choose what they do pay for and not pay for. There'll be a shutdown, and we've had this happen before, Joe, where they did shut down the government, and they shut down all the non-essential stuff and furloughed workers and all that stuff. And then once the government put a plan together, they back paid everybody. And I actually think that's where we're headed. I think they're going to push past that date, and they're going to start paying who they want to pay, and then not pay everybody else. I think that actually happens.
I've heard none of this, because you're right. They did. We've heard none of that, which I don't know if maybe the situation is different, and they're not able to do that. Because you're right. Logically, you would think that this would have been done, and it hasn't. But that could be maybe where, hey, if it doesn't happen, but they think they can get a deal, and let's just make it up. Let's just say, hey, they're going to run out of money on June 5th. But they think they're really close. Maybe that's what they do. Hey, all federal employees, you're not going to get paid, but we think we could have a deal done in 3 or 4 days. To try to help make this work. The big thing about June 1st is the Social Security money, because that's the big drawdown, and that's the one thing that they know they don't have to do. But once that money goes out the door, and obviously being June, there is revenue coming in. It's not a lot of revenue, but there's revenue coming in. But it won't. It'll dissipate very, very quickly. But it is interesting because we haven't heard that threat. And you would, I would say this: if I was a government worker, I would at least want to know that, hey, listen, this may happen to you. You may want to try to, hold some money back because you may not get a paycheck. But I just haven't heard that talk. But you're right, Jason. I know we've done it in the past.
Maybe the problem's just different. Maybe because I think it was during the Obama years. So you're talking 08 to 16. I can't remember if it was 2014 or what year it was. But I remember when they shut everything down. Obama wouldn't let people drive up to Mount Rushmore, right? Yeah, well, you can't even look at Mount Rushmore.
The parks, you couldn't go to any of the federal parks, right?
But maybe the problem is the essential money was still there. Maybe the bills weren't as bad because now you got the interest on the debt, Social Security, the military. Maybe these numbers are so big now that there's going to be default.
That's not right. That's not enough to help. Could be, right? It's just not enough to help. Wow. Patriot Trading Group, allamericangold.com. We'll be back right after the break. Six 237803117. We're still waiting. It's so funny. It's not really funny at all. It makes me I'm about losing my mind over this 800. I don't know how it can be this screwed up, but they still are assuring us it will be working today. But for right now, call the local number, 623-780-3117. $10 liberties. That's where you need to be. 1 through 19, 1125, 20 or more, 1120. U.S. Silver Eagles. As far as I know, we're the only one below $800 roll. $790 a roll on U.S. Silver Eagles. We got $20 gold pieces at $2,300. We've got 10th-ounce gold Eagles at $275. Rolls of dimes at $120, quarters at $240, half dollars $255. By the way, if you're telling me, hey, what am I buying today? I'd be buying some half dollars too, $255. That's almost like $55 from the high where half dollars a roll of half dollars was like 6 weeks ago. That's where I'd be looking, as well as the inflation data today. The PCE deflator, which is the quote-unquote favorite number for the Fed. Why is it their favorite number? Well, number one, it's the lowest number. And number two, it actually doesn't track inflation at all. And they put it right in. At least, Jason, I should give them credit because they do put it right in the name, right? Deflator, right? Hey, we're deliberately manipulating this number, right? Now, why would that have any value at all? It shouldn't, because you're telling us that you're going to, I guess, massage the number. But the deflator number rose month over month. In both the increase from month of 0.4% increase, 0.4% hotter, so when you do that's 4.8% if you annualized it, right? Their new annualized number that rose as well. I think the annualized number was 4.7 or 4.9. I can't remember which. But again, remember, that's a totally fake, made-up number. Right? And, of course, we know, which means the real inflation number is much higher than that. And I think that's what the problem is, and that's what this data point is showing. We did have Loretta Metzer. She's been out talking now. She's a non-voting member. So, and I'll get to who these people are. But she is now saying, we got more work to do. Now, that doesn't matter so much because she doesn't get a vote. Here's who does. John Williams, okay? He's New York Fed. That's a permanent seat. If you're the head of the New York Federal Reserve, you vote every meeting, right? Because, again, remember, that's the connection to the banks and Wall Street. Austin Goolsbee, he is now the head of Chicago. He's new. He is very liberal. Why does that matter? I don't know that it does or doesn't, but he will do, I think, whatever Jay Powell tells him to do. That's just my guess. Patrick Harker from Philadelphia, I haven't heard a lot of comments from him. Now, Goolsbee, we know, he was one of the guys that said, hey, I almost said no to raising rates the last meeting. That was Goolsbee. So he's going to be one of those guys that probably doesn't want to raise rates. Don't know. Harker hasn't said much. Then it's Lori Logan. Well, we talked about her last week. She's the Dallas Fed. And Jason, obviously, she's like, inflation's way hotter, right? She is definitely on the I Want to Hike campaign. And then last but not least, Neil Kashkari is the other one. And he also is on the we've got more work to do. So, Jason, we can see very easily here more rate hikes coming, which means more bank failures are inevitable.
And remember, you got to always remember how the numbers are computed, which is why I've been looking at CPI, which is a year over year. And, Joe, you report the month over month number, which the one you reported today was hotter than it should have been, or at least what they were projecting. You got 2 more months from year over year last year that went up. And from then on, it's down. And I mean, the amount it went down from July of last year on is 0.6, down 0.2, down 0.1, down 0.5, down 0.6, down 0.6. It drops off pretty significantly
big drops.
now.
Yeah, big drop.
Right. And so if we have 5%, or if it goes up to 6 or 7% in those drop-off months, it's pretty much the same inflation we had in 2022. It's just the way they compute the numbers is always very confusing. You have to really try to understand, really what we should be looking at is where was it when it was so-called normal versus now, and you add it up, and these are big numbers. It's been high for a while. I mean, it was high in 2021. It was high
right.
then, and it got higher in 2022.
If you think about it, this is year 3 of high inflation. Yep. Because remember, 2021, they were doing, transitory. Remember that BS? It's transitory. And, of course, this has allowed it to take a foothold. I think the biggest concern was wages. Gotten even hotter. In other words, companies are like their employee, they get it. I got to pay my employee more because if I don't pay them more, they can't put gas in the car to go to work, and they can't put food on the table to feed themselves, and they can't pay the power bill. And this is a number, though, that's like permanent inflation, right? You don't give out raises and then a year later say, by the way, now inflation's on, hey, I'm going to take that 5% back. It doesn't work that way.
Yeah. Listen, if the employee can't pay their bills on a 40-hour work week, so to speak, why are they working the job to begin with, right, Joe? Right? And I think that's why the employment numbers are skewed. You lose one job, but you gain two to replace it, and suddenly employment looks better, but people are working more jobs with less efficiency, Joe. So the numbers are a little bit skewed.
623-780-3117. We'll wrap it up for the week. Final segment coming up. Final segment here on this Friday. CenturyLink is continuing to work on it. They'll get it figured out here, but right now the 800 number is just floating off into outer space. I don't know where it goes, but wherever it is, they're working on it. But 623-780-3117. If it's busy, you can always go to allamericangold.com and order online. That way, all the specials that we talked about are up there, so you can just use the power of the internet to get that accomplished today. Gold is flat here, 1943. Silver's up 40 cents, 23.20. The Dow is up 200 plus points right now. The 10-year note making some noise here. It's been a while since we talked about, the 10-year note maybe be going over 4%. Think about it. This is how unnatural the situation is. We have a Fed's funds rate, between 5 and 5.25. Let's just call it 5%. We got a Fed funds rate of 5%. The 10-year note should be at 7%. Right? And mortgages should be like 9%, right? Coming to 10. But it's not, because obviously, right, think about this. I think that would probably end every bank. But even now, with the 10-year note, again, pushing towards that 4% level, Jason, that shows a significant amount of stress. And part of the problem that we're noticing is FX trade. People needing dollars, countries needing dollars to buy products. This has been a big, big thing. And this number, every week I'm looking at these charts. Less people needing dollars, less countries wanting dollars, month after month after month, right? They're doing cross-border trades in renminbis. They're doing cross-border trades in their own currencies. Jason, that takes away demand from this treasury market. Another reason why we're probably seeing these treasury yields rise, because how do you attract more money? Because that was money, hey, you had to do it no matter what the yield was. Even when, 10-year notes yielding 0.5%, well, you still had to buy it. Still had to buy it because you needed to buy oil this month, or you needed to buy corn, or you needed to buy wheat. Well, now they don't have to, because they're going to use China's currency or whatever it's going to be. Well, the only way to get more money, you got to increase the bribe, right? Which means what? Pay more interest to get to attract that type of money. We know money markets right now are yielding maybe 4.5%. The 10-year note's probably going to have to at least get to that, Jason, to keep attracting enough buyers.
Yeah, these are the problems that the system has in place, right? This is what made those banks fail. They're too heavily leveraged in lower interest debt, and they're trying to find their way through this thing. And if the Fed wants to have a longer term solution to try to make the boat stop rocking so hard, they're going to have to keep interest rates up. Even if they don't raise rates, they got to keep them solid so that they don't have too many dead banks with assets on their books that are so low interest that nobody wants them, right? All this stuff has to have time to mature, Joe, for them to have more of a normal, market, is how I see it.
623-780-3117. Keep adding to your portfolios, allamericangold.com. Jason and I are coming right back with the short version of the half-empty cup.